Did you know that Tesla recently announced a 3-for-1 stock split? A lot of people may not have been anticipating this because of the recent dip. Make sure to stay tuned and find out what this 3-for-1 split entails. By now, it is a well-known fact that a lot of stocks in the market have been experiencing a downward spiral trend. Not only Tesla, but also other big corporations like Apple and Google's stock prices have been dropping like hot potatoes these days. Despite this dip, these corporations are continuously thriving and are considering this as a regular part of the process brought about by the numerous, unforeseen incidents all over the globe which also affected the economy. In today's video, you will find out all you need to know about the Tesla 3-for-1 stock split. For Morgan Stanley's Adam Jonas, a renowned Tesla bull, the current landscape for EVs is a race, and Tesla has been winning so far. He compared the EV industry to a marathon and said that Tesla leads at mile 21, while other companies are still at mile 2 and others are still tying their shoes, figuratively speaking. He supported this claim by explaining that recent records of car deliveries are proof that Tesla's position remains strong and is becoming stronger as the marathon progresses. That said, any news about Tesla is sure to create a buzz, including the recent announcement of a 3-for-1 stock split ratio. What is a stock split? According to Forbes, a stock split is when a company's board of directors issues more shares of stock to its current shareholders without diluting the value of their stakes. A stock split increases the number of shares outstanding and lowers the individual value of each share. A stock split is cosmetic and could mean that smaller investors feel they can afford the stock, but those investors are minuscule compared to major institutions. Many brokerages already offer investors fractional trading, allowing small investors to buy a slice of seemingly expensive stocks. Stock splits don't change the value of a company. For example, investors in a company with a stock trading at $100 that does a 2-for-1 stock split will simply own 2 stocks worth $50 each. The value of their 2 new shares is the same as their prior single share. Yet, companies that engage in stock splits often outperform the market, according to Reuters, citing Bank of America research. This could be due to investors buying shares in a company after a split because of the perception that the stocks are more affordable. Companies whose stocks have risen to high prices, such as hundreds or thousands of dollars a share, often turn to stock splits to make the securities more accessible to individual investors. It is no secret that Tesla's shares have tumbled this year amid economic pressures like the COVID-19 related shutdown of Shanghai, which crippled production at a Tesla factory, as well as Elon Musk's $44 billion takeover offer for Twitter. This controversial announcement has put pressure on Tesla stock because Musk has tapped his holdings in the EV company to provide financing for the social media purchase. Recently, Tesla submitted a 14A filing with the SEC that clarified its plans for the 2022 annual stockholders meeting, which is set to happen on August 4th. Along with several agenda items listed in the 14A filing, Tesla described its intention to split its common stock by a 3-to-1 ratio, which will triple the number of available shares and split the price by 1/3 on the day the stock split takes place. This move does not affect the valuation of the company. It simply increases the number of common shares available of a publicly traded company, while decreasing the price to make shares more affordable for investors. Tesla announced that its board of directors has moved to execute a 3-to-1 split for the company's common stock. This basically means that if you own 1 Tesla share, you will get 2. According to them, this move will make the ownership of Tesla stock more available for both employees and investors alike. It is actually commendable that this move is partly to make its shares more accessible to retail investors. The said announcement came after the company's shares shed 42% of their value this year. Shares of Tesla were up by more than 1% after hours, having closed at $696.69 on the day of the announcement. While this value appreciation has led to our employees benefiting enormously through the years, we want to make sure all employees, no matter when they join, have access to the same advantages, the filing said. In the said filing, Tesla stated, "The primary purpose of the authorized shares amendment is to facilitate a 3-for-1 split of our common stock in the form of a stock dividend, the stock split." They further added to say that, as of June 6, 2022, we have 1,036,390,569 shares of common stock outstanding, and the current number of authorized shares of our common stock is 2 billion, which is insufficient to effectuate the stock split. Our board intends to approve the stock split subject to and contingent upon stockholder approval of the authorized shares amendment. What are your thoughts about this 3-for-1 stock split? Let us know what you think by leaving a comment in the comments section below. Tesla says the 3-for-1 stock split would be executed via a special dividend given to investors. Some may recall that in March of this year, Tesla said that it would ask for authorization for the stock split at its annual meeting. Now, the company is disclosing how that split will go down. In the filing, the company wrote of the proposed stock split, "Our success depends on attracting and retaining excellent talent," and that highly competitive compensation packages offering every employee an option to receive equity helped Tesla to do that. "We believe the stock split would help reset the market price of our common stock so that our employees will have more flexibility in managing their equity. If approved, this marks the company's second stock split in less than 2 years. It can be remembered that on August 11, 2020, Tesla declared a 5-to-1 stock split, which took effect on August 31st of the same year. The price per share before the split was $2,213.40 per share, whereas shares traded at $442.68 afterward. During this time, Tesla's stock was trading at around $1,300 a share, but the stock split announcement sent its stock price surging to a record high of $2,000 a share, wherein the split resulted in the price per share being reset at around $460 and a valuation of about $430 billion. Tesla also stated that as a part of the proposed for the shareholders meeting, it would like to increase the number of authorized shares of common stock by 4 billion. Our certificate of incorporation currently authorizes us to issue 2.1 billion shares consisting of 2 billion shares in common stock. Par value 1/1000th of a dollar per share, and 100 million shares of preferred stock, par value 1/100th of a dollar per share, the company wrote. The authorized shares amendment provides for an increase in the number of authorized shares of Tesla common stock from 2 billion shares to 6 billion shares. The authorized shares amendment would not change the total number of authorized shares of preferred stock. We are submitting to our stockholders a vote to adopt the inclusion of certain provisions in the proposed amended certificate to increase the number of authorized shares of common stock by 4 billion shares, Tesla said. In its 2022 proxy filing, the electric vehicle and renewable energy business also revealed that board member Larry Ellison currently owns 1.5% of Tesla shares. Ellison plans to relinquish his duties as a member of Tesla's board of directors. The filing also says that Tesla CEO Elon Musk currently holds 23.5% of Tesla shares, and Vanguard holds 6% of Tesla shares. Musk sold a considerable chunk of his Tesla holdings in late 2021, in part to shore up a stake in Twitter, the social networking giant he agreed to acquire for around $44 billion. Today, Tesla's stock trades at around $700 per share and has a market capitalization of $720 billion. If the stock were to trade at the same level by the time the stock split goes through, Tesla stock would be trading at around $233 per share, according to Electrek. Electrek is an American news website dedicated to electric transportation and sustainable energy. Electrek is known for its extensive positive coverage of electric transportation in general and Tesla specifically. It was also said that Tesla will also ask shareholders to vote to reduce its board of directors' terms to 2 years from 3. If approved, the terms would be staggered over 2 years. Investors and investing enthusiasts are well aware that Alphabet Inc., Apple Inc., and Amazon.com Inc. have also recently split their shares. And while a split has no bearing on a company's fundamentals, it could buoy the share price by making it easier for a wider range of investors to own the stock. Visit our channel and watch our other videos for more Tesla stock content.